Today's episode is brought to you by Security Financial Management.
Welcome back to Best Advice Podcast, guys. I'm your host, Rob Lovaglio, here as always with Mitchell Allen and a first-time appearance, Daniel Corson, one of our advisors here at SFM. Gentlemen, what's crackalackin'?
Yeah, Rob, how's it going today, man?
Buzzing over here.
Buzz, Lightyear to the rescue.
Daniel, first day. What's up, man? Welcome. We're glad to have you, man.
Me.
Yes, sir. We like to start each episode with the powerful practice of positive thinking. We like to call this, give me something good.
Give me something good, just what I like.
My give me something good today is about people's ego, right? And how like bad egos are, really. Right. So I saw this, I forget where I saw this, and I wrote it down immediately. I'm like, that's a perfect give me something good. That's how my day works now. I'm like, oh, give me something good. Give me something good.
You never know when you're going to find the good.
This is, most people rather be right than be free, right? And what I mean by that is that being right is the poor man's version of being wealthy, right? Mm-hmm. So people would rather be right than get what they wanted, right? So, for instance, like we will prove to ourselves, if we've told ourselves this is good, this is way good to be true, we're going to end up sabotaging that because deep down, we'd rather be right than get what we want there, right? Or like, if you ever think like, oh, I know this isn't going to work, right? You really want it to work, but like you'd rather prove to yourself sometimes. Your ego wants to prove to yourself that you're right and you're smart and you knew this wasn't going to work.
Yeah. I mean, I get that. It's like when you're coming up professionally, when you're first starting the business, you have those doubts about yourself, you know, giving a seminar or whatever it may be. But then next thing you know, you give a seminar and, you know, the right words are falling out of your mouth and the confidence is there and you didn't self-sabotage yourself that time. So, you know, this time you get yourself a win.
Like, hey, you were wrong, but guess what? You grew way more as a person.
Yeah, you were wrong.
And just developed.
You were wrong, but you challenged yourself and you gained yourself a skill.
That's awesome.
You know?
Yes,
so
exactly. You got it, Mitch. You know exactly what I'm saying.
You got to run in the face of it sometimes.
It's like, okay, well, you get to be right despite you hurt someone you love or you lost that opportunity, that job you wanted. But hey, man, you were right. Right, so good for you. And what do you get out of that? Victory. So what's the end goal there? Why is it so good to be right? It's all it is your ego.
I mean, it's self-preservation. You're making yourself feel good at the end of the day.
Exactly.
Yeah, everyone's going to do that to some extent.
And that's how subtle and destructive like egos are. Right.
You gotta keep it in check.
Keep it in check, baby. So that's mine. Give me something good.
Because I'm good enough, I'm smart enough, and doggone it, people like me.
Let's get to the question of the day. Today's question comes from Gage from Clearwater. Gage, what you got for us?
You want to say something?
Guys, Gage says, 2024 marks my first year owning a business, specifically a construction company. Would you happen to have any advice on business deductions? I would love to be prepared for the end of the year taxes approaching.
Thank you, Gage. Great timing with end of the year coming, tax season. Mitch, will you take this over for us, please?
Yeah, absolutely. So with the construction company, you know, I would venture to say, you know, one of the most common deductions out there is, you know, that for a vehicle. You know, if you have a vehicle that you use for business, then this is available to you. There's two methods to do it. You can deduct each mile. I think 67 cents a mile, I think is the 2024 rate. Or you can do a percentage of your costs like repairs, maintenance, gas insurance, lease payments, you know, what have you. With this, though, I would say, you know, in the construction business, you probably have a vehicle that might weigh over 6,000 pounds. You know, if you have that available to you, you can get some bonus depreciation through the Tax Cut and Jobs Act, which I think for 2024 is I think it's a 60% bonus, which, you know, that's very good in the first year. So, awesome. You know, take it where you can get it. But, you know, my tip for that would be, you know, document. You have to keep good records of, you know, the dates you drove, the exact drives, the destinations, you know, how many miles you drove. So, you know, if you're looking to claim a vehicle deduction, then make sure you keep really good records. So.
Beautiful. So number one would be vehicle. Dan, what you got for us?
Another good one would be home office. You know, this is very common. But let me point out, this is strictly for self-employed individuals, small business owners, freelancers. Sorry for the ones on W-2 salary. Those rules have gone by the wayside. But you can, and also it has to be regularly and exclusive use of the office.
Oh,
You
so
can-
it can't be like a workout room /
No.
office.
It can't be
Exclusively for business.
You
No
can't write
crutches
off
in
your
there,
spare
Rob.
bedroom that your kids are also.
You're also
have a
renting on
playroom.
Airbnb.
Yeah.
But the good thing is you can write off things like rent, utilities, real estate taxes, repairs, maintenance, and other related expenses.
Oh, wow, that's a lot.
Yeah, and you don't have to be a homeowner either. You can be a homeowner or a renter. You know, it can be a condo, apartment, single-family home, a boat. It just can't be temporary housing. It can't be a hotel or
Interesting. That's cool.
or
yeah.
Airbnb renting for a month.
Just has to be exclusively for business.
Exactly, and that is the key word. But you can be. I mentioned you can't be a W-2 employee, but however, a lot of people that have work for a corporation will have a side gig.
Mhm.
Maybe they're selling something and they're working. Now that is an exception. So, you know, just keep that in mind because a lot of people may run a little side business on the side. But something to point out, there's two methods of calculating. You have the simplified method and the actual expense method. We don't have time to get into the details, but I'll just point out that the simplified method works well for single room offices and small operations. And then the actual expenses method, which is where you do more itemized deductions, is if the office makes up a larger part of the home. I would encourage get with your tax advisor, get with your financial advisor, and you can determine which method works best for you.
Amazing. Marketing. So marketing's pretty simple, right?
Tell us about marketing, Rob.
What do you think
Marketing's
about
good. This
marketing?
is in my bag, guys. This is in my bag. I am a marketer. You basically can do obviously like the website development, SEO, marketing research, social media, email domains, promotional events. All that stuff is pretty simple, right? If you want to get in the nitty gritty of it, you can. Which is pretty cool is deduct if you pay for a third party. So let's say you're paying for a third party lead generation, right? That's a lot of money. Those cost about $4,000 a month if you have a good one.
Yep.
And those are things that a lot of businesses won't expense because it feels like, not a marketing expense, but in the reality of it, it is. So any cost to commission or referrals that is coming out of your business is also considered marketing and is also deductible, right? And that's only for business. The individual is a whole nother conversation. We're going to have a whole nother episode for that. But for marketing, business owners, I would double check and make sure you do that.
For sure. I mean,
Yeah.
for a small business owner too, just starting your business, it may feel like a headwind to spend money on marketing. But at the end of the day, if you get yourself a tax deduction, that can lessen the burden of it. And
Yeah.
obviously,
Oh, for
we know
sure.
marketing at the end of the day is a good thing for a new company because how can people know what you do without
Yeah.
you telling them? So,
And especially new companies, right?
Especially
You
new
pay for
companies.
these leads that come in and then you get to deduct it and then your business is growing.
And the new age of social media,
Mm-hmm.
using Google to your advantage.
Mm-hmm. I'm in
Yeah.
the middle of making a funnel for us, an email funnel, and there's so much to it, man. You're linking like ChatGPT with Zappy to Instantly AI to Open Reach Out, and it's just a huge funnel that's coming through, and there's a lot of big
Whoa, little fella, you're not speaking my language.
I got a good one because I'd say this is my most popular question when it comes to business tax deductions. Is should I hire my child as an employee? And it's a good one. There's a lot of rules to it, but I say it's a double tax break for both the parent employer and the child employee. You're keeping it in the family. And you can pay your child a salary as long as it's under the standard deduction, which this year is $14,600.
Good memory.
Yeah. We have to memorize these things in our business, unfortunately. Lots of things to keep up with. But I want to point out some important things, and you got to get this right or the IRS is going to be on you. Some key things is give them an actual job. You can't just, have your kid mowing your yard and say, okay, they're working. They have to be literally doing something for your business. Make sure the work suits the child. If you have a teenager and they're running your social media, like what you were just talking about, or they're sweeping the job site, keeping it clean, yeah. But don't let a kindergartner be keeping your books. You have to be reasonable. Pay reasonable wages, at least, minimum wage, if not a little bit above that. Don't pay $100 an hour for doing, scanning
Saying
papers.
hello to everyone as they walk in the door.
Wish I had
Hello.
that gig.
He left college his junior year because he said he wanted to join the family business.
But you're a medical doctor.
Believe me, I've told him that.
You have to follow employment laws with proper withholding, keep good records, document the hours that are worked, and consider the tax implications. But yeah, there's a lot of restrictions, so I would say definitely if you're going to do that, make sure you have a conversation with your tax advisor, because there's a lot of rules about how old the child. If the child is 18 or over, 21 and over, they're gonna have to start paying for Social Security tax. But if they're under 18, you get to get around those. Bottom line, just make sure your child has real duties and that you're following all the guidelines.
Every week, a third of my paycheck goes to Uncle Sam. And for what? Roads with potholes? The space shuttle? Why are we sending our money to NASA? They're never taking us to the moon. I need my money here on Earth.
Yeah, so last one I'll mention, I think this one's probably super important for a construction business as well as, equipment, which basically leads into depreciation. If you have tangible assets, which could mean, an asset that you physically touch, whether it be a hammer, a piece of machinery, a big heavy duty truck, whatever it may be, you can generally spread those costs out, on a depreciation schedule. So if you expect to use that piece of machinery for 5 years, you can depreciate it over a 5-year period. You also have the option to take it up front. Let's say you have a $50,000 machinery that you bought this year to help make your business more efficient. Through Section 179, not to get too technical, you can actually take the whole entire upfront cost and deduct the whole thing. So there are ways that you can, make your job site more efficient with buying new machinery, but also kind of lessen the burden of the cost of it with the tax deduction. So, as Dan's been saying, you want to make sure you consult with your CPA on depreciation because it does get in the weeds a little bit, determining what method's better for you, whether it's straight line or a percentage based. So you want to make sure that you're dotting your I's and crossing your T's. But, for a construction business, this is probably one of the ones that I would really hone in on, machinery and depreciation. So obviously we just went over a lot of very fun tax information that, is pretty complicated. And if you have questions about this information, please do not hesitate to reach out to us in the link below, via our emails or our phone number below, and we'll get you the answers you need, whether it's through us or through a certified public accountant.
Amazing. Hope that helps, Gage. Remember, folks, the secret to wealth is not what you earn, it's what you keep. Happy days, everybody.
This podcast is for entertainment and educational purposes only and is not intended as personal financial advice. Before making any financial decision, please do your own research and consult a financial advisor as needed. If you have a question for the guys, email podcast@bestadvicepodcastguys.com.